The other thing I want to highlight, which I thought is very important that you brought up, that I don't think gets talked about enough, is structured product issuance. The amount of not just structured products, but also ETFs now.
Mm-hmm.
We have seen an increase in the last 3 years from $500 billion of structured product issuance to almost $1.5 trillion. It has almost tripled. I mean, that's hard to comprehend, but the majority of those structured products are vol compressing, right? And not to mention all the ETFs and everything. So there's a structural offer in equity vol, in particular, at the index level.
Very much so, and it's part of this broader trend of retail investors, high net worth investors getting involved in options and derivatives and futures and crypto and risky trading. Yeah, the structured product boom has been wild. So I've been involved in structured product markets for decades. They used to be a Europe and Asia thing, right? You used to be U.S. folks traded stocks, but what you saw after 2020 was a huge migration to where the big growth in structured product markets was in the U.S.
Yes.
And not just in the U.S., but actually unusually kind of evenly split with index, which has always been a big thing, but also single names.
Right.
So when you look at a lot of the structured product baskets that trade now are all of retail's favorite names. It's NVIDIA and Palantir and Tesla, all the momentum names, right? And so what that does, most of those products, there's a million different kinds, but the core thesis is usually it's selling long-term crash risk to get yield, right? So what you see is the long-term vol and option prices in the downside wing and all those names, and an index gets crushed, goes below the call side.
Yep.
And so, we can I'm sure we'll talk about this later, but when you're thinking about where is there cheap convexity in the world, being on the other side of that kind of long-term crash risk is a really nice way to get.
We might as well talk about it now. You dove in, I think that, dispersion, right? I think, we are seeing so much index vol compression, and some of it's the macro, right? The reality is we are seeing more different news in big ways that is changing outcomes for single names. But we are also seeing a dramatic amount of vol compression at the index level that then is pushing correlation away from each other. Maybe speak to that a little bit. Again, a big idea that not a lot of people get, but I think a very important one.
Yeah, very much so. So, dispersion is a very standard trade that a lot of people have been involved in vol markets for a long time. So a dispersion trade typically is where you're buying a bunch of single name vol on the index weights, kind of buying the index weighted basket of single name vol, and then you're selling index vol against it. So historically, index vol used to be pretty expensive. And so that people thought of dispersion as like a risk premium where you were just always supposed to do that trade. But exactly as you allude to now there's a lot of index vol compression, right? It depends on what tenors you're looking at, but especially in the short end, there's a ton of index vol selling. And so, that trade has very much moved away from being like an all-weather risk premium kind of thing to more like a tactical thing, depending on opportunities. And sometimes you might want to actually totally be the other way. You might want to be short the single names and long the index. And so what we've seen is a huge amount of crowding from time to time in that trade.